It's Monday and once again time to look ahead to what may or may not shape the markets this week in Dukascopy TV's The Week Ahead. Joining me on the line today is Barclays FX strategist Chris Walker. Hello Chris. What do you think investors and market players should be keeping a close eye on this week?
Well, clearly the main market focus has been on Cyprus and the fallout of it we received late last night. So far, the reaction has been very muted. We didn't see a huge sell-off running into it, despite heightened stress and potential for a very negative outcome. And coming out of the deal, we've actually seen something very similar in the sense we've rallied a little bit, but we've not had a huge reaction in equity markets or FX markets. So now that sort of risk has been removed in the short term, we can probably move on to other drivers, be that in Italy or further macro drivers instead.
US consumer confidence recently fell. What results do you think we can expect on Tuesday when US consumer confidence data for March is released?
Yeah, there's been a few drivers behind why US data on the consumer side has started to fall slightly. The main one was, of course, the payroll tax came into effect at the start of the year, so we did see a sort of move lower. But generally, when you take away those effects, it's still quite a robust print, and the underlying demand in the consumer sector is still quite strong. So even though we could see a little bit of weakness as these effects dragged out, it's still on a relative basis fairly strong.
UK GDP quarter on quarter and year on year is due on Wednesday. Can we expect negative or positive data?
It's actually the final print for Q4, so we don't usually tend to see too much in the way of change from the previous estimates. Since we've had the last data, the negative contributions are mainly coming from net trade and also investment, and that hasn't really changed so much. So we don't expect any changes to the print of minus 0.3% Q&Q growth.
On Thursday, the Bank of Canada Consumer Price Index for February is released. What kind of figures can we expect?
We've seen a stabilization in data, mainly in the manufacturing side. So eventually that'll probably feed through into CPI estimates. Consensus is looking for just a 0.7% month on month on the headline number and a slightly softer on the core numbers. So it's not going to have a huge market reaction, but if we do start to get a pickup, then that will eventually feed through into more hawkish outlook from the Bank of Canada.
Also on Thursday, we have German unemployment change for March releasing. Can we expect unemployment to have risen past the current minus 3K?
We're expecting a similar kind of print to what we saw last month. The bottom line is that unemployment in Germany is still very low, and the market is very robust, so we don't think it's going to be a huge driver of euro weakness. The wider macro concerns outside of Germany and forward-looking data such as the PMI indices are showing a clear divergence between Germany and the rest, particularly France. So that's probably a bigger driver of sentiment.
US gross domestic product is due on Thursday. Annual GDP currently stands at 0.10%. Do you think we can expect GDP to have worsened or improved?
So the information we've had since the previous print suggests we should have GDP numbers revised higher. Barclays are expecting a number of 0.7%. Which is really a function of investment numbers and a smaller drag from accumulation of inventories. So we think that should probably be supportive, but this is obviously backward-looking data, so the market has probably priced that in somewhat, and consumer confidence and other forward-looking data are probably going to be bigger drivers for the market.
Thanks for joining me, Chris. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates throughout the trading week. Goodbye for now.